On days when it's nice, we press the button twice. Sorry about that, guys. How's everybody doing? Hello, Lee. How are you doing, my friend?
Hello, hello. Good.
Welcome to another episode. Well, I'm happy, buddy. I'm really happy we're on the right side of this. So it's always nice to look at the charts. And I always say, when I go about, I want to protect my mood. And the only way I get to protect my mood is to always have a plan if things go wrong, and then be on the right side of it so I can capitalize. So happy about that. Yes, and we did call a few good ones yesterday. So for today, we're going to be touching on them, guys. We're going to be looking at Bitcoin. Obviously, it's a big market direction indicator that we use to see whether we're going to be going up or down. We've got a few interesting things we want to share with you guys regarding our social platform and so forth. And then we're going to dive into some coins. You know, we've had a dump. We've had a few jump right into the entry zones. Maybe these are premature entries. We're going to discuss those entries. We're going to look at potential take profits for those entries. We don't want to give away unnecessary gains. So, guys, stay with us. It's going to be a busy one today. It might be a little fast at certain areas, but we'll try and make it so that everybody can digest them easily. So, welcome to Crypto EMC, guys. Still a little reserved on that video, Lee, but it's the first time in a week that I remember to press that button. So, buddy, Bitcoin. I mean, we were looking at it yesterday and we said, hey, we lost a lot of momentum, and rightfully so. And now we lost a short-term trend, and we're busy correcting to the downside. So, what's your thoughts? Because at the moment, we're currently sitting with a little bit of bullish divergence.
Yeah. The problem is that is a hidden bullish divergence. So I'm expecting, if you lock it in like this, if you close the daily like this, expecting a reaction up. For now, what I can see on my screen on the chart is it is only a 3 waves down, which means it is still a correction pattern. So on a midterm, nothing changes on the uptrend. We are still in tune with those higher targets for the end of the year, beginning of next year, on a large time frame. So it is a small time frame. Like we said yesterday, it was just a move to shake those leverage people out of the market, especially those retail ones. And yeah, and it was really expected. So I hope that no one is has been caught on that move. Basically short term, I really like what I'm seeing right now. That I did highlight a supply zone that the price should react just below this 59K, and we did have a really nice reaction at 59, 58, 659. And if we can hold this kind of level, then that should bring us to
But before we dive into that, let's just quickly, I just want to lay a little foundation and the hidden bullish divergence. I mean, you said that word, and I want that you guys to, when you hear that, bells need to sign off. Please just touch on that, and then I'll bring up your chart, because then we can talk with that mindset. What does it mean when we say hidden bullish divergence?
It's a weak divergence. If you Google those divergence charts on Google, the hidden one will call for continuation of your trend. Okay.
Currently.
So if you're assuming that we are in an uptrend, then the hidden bullish divergence will bring those price back up again as a continuation. The danger is, what if the trend has changed and it's the beginning of the bearish trend? Then those hidden bullish divergence will be deleted every single time by the strong bearish divergence that is coming, or even the hidden bearish divergence that is coming. So it's always a constant fight between the two sides of the market, between the bulls and the bears. The trick is to take a position, whether you are with the bears or with the bulls. Get ready for your divergence to be deleted by the other parts of the traders. And So when I see a hidden bullish divergence, if I am bullish, I will trade it as a continuation of the trend. And basically, it's a good strategy. It's a good setup because you know exactly where to put your stop loss after that.
Good, important little tip there. So let's bring up the screen and let's talk Black Friday sales.
But it's not Black Friday yet, right?
Not yet. Black Friday is on its way, but I think that was a well-placed time to a little snippet in there. Okay, Lee, so we've got, so maybe just highlight your RSI line for us there at the top, because sometimes mine's at the bottom, so it can so there is Lee's RSI, and what we were. Yeah, so what we were discussing now is the hidden bullish divergence, guys. So remember now, continuation. And currently, when you look at those candles, the impulse and the strength of the markets to the downside, because we had high wicks to the upper end, there where Lee's little yellow badge is. And currently, this new candle closed, and there was very little fight in the bulls to push a wick up. So that shows us that the bears are stronger now at this given moment. And we've got some decent momentum down. So from this point onwards, Lee, I'm going to hand over to you and to explain the divergence and give the viewers a bit of a game plan.
Well, it depends also on which time frame you are looking at the chart. So I mean, on 8 hour, I don't see any divergence so far. That's gonna tell me that within this 8 hour time frame, everything is basically in tune with the momentum. So we're making lower highs and lower highs on RSI. So for me, 8 hour, there's nothing that gives me any kind of sign of bullish divergence. Okay, but let's look at 4 hour for example. If we can see any divergence on 4 hour, 4 hour, there's still like 90 minutes left. For now, I don't see any divergence forming in 4 hour either. Maybe 1 hour. Now, 1 hour, what is interesting is now the RSI is right here at the bottom, below this 30 kind of level. And that is, for me, already, okay.
Oversold.
If I have to, it's oversold, but if I have to trade a setup like this, when I see RSI in 30 minutes, below this 30 level, I'm basically getting ready. I'm ready to take a trade. I'm just waiting for the perfect setup to come. Now, in 1 hour chart, here we can see bullish divergence forming, okay? And it's not even a hidden bullish divergence, it's a strong bullish divergence. Why? Because price is making lower lows and RSI is making higher lows. Now, what is a strong bullish divergence? Strong bullish divergence marks a change of momentum. So basically, the momentum can change at that point, but we are still on 1 hour time frame. So in the 1 hour time frame, I'm pretty confident that this could bring us at least 3 waves up, back to maybe 62, even a little bit more. And if you're only trading on 1 hour, what I'm expecting here is RSI is gonna go up, price is gonna go up a little bit, but we must be careful on this 1 hour chart and hunting for this hidden bearish divergence. Because now if RSI is coming, it moves something like this, higher highs, okay? Equal high of this pivot, for example, at 37 on RSI, and price is still sitting around $62,000. Now we will have a hidden bearish divergence, and the bears or the seller in the market at that stage will take this opportunity to try to push the price lower again. So this green candle can come back to 62, 65. I will be watching those hidden bearish divergence. If the seller are still have some momentum or some strength to push the price down, then they will try to make another lower low, coming maybe to this box or even this box lower, 56, 55. And then RSI, hopefully at that time, will make another strong bullish divergence like this. Now, this is another signal that, okay, maybe we're going to try to reverse the trend from this point of view or from here with that strong bullish divergence. The risk is if they push too hard, now they're going to kill every single divergence, even in 1 hour. And then we have to do this kind of strategy again. When you see another hidden strong bullish divergence, price making another strong bullish divergence, now there's another setup for you, another trade to be taken. based on the strong bullish divergence, and that is on 1 hour. And the same exercise, the same setup can be done on 1 hour, on 4 hour, on 8 hour, even on a daily.
Even on a 1 minute.
Even on 1 minute, yes.
The nice thing about trading, though, is, guys, and that's why it's important, why we teach trading and then we apply that to investment, is because if you're a capable trader, you're a brilliant investor, because you just need a little bit of these insights to apply it on a slower moving, larger time frame market, and you'll be able to maximize your investment runs, not giving back 50, 60% every time and then think, okay, we're turning downwards. And therein lies a lot of simplicity in the market. So you don't have to have a different skill set. If you get to do this well, you'll be able to do well as an investor.
And best case scenario, in that case, best case scenario, what if the bulls gain control? So then they will delete this hidden bearish divergence, because remember, hidden bearish divergence is a continuation for the bears to go down. But what if the bulls manage to reverse that trend? Then the bulls gonna go kill this hidden bearish divergence, price will make a higher high, kill this pivot here. Make a higher high compared to this pivot here, make a higher high. And the goal for the bulls now is to go with RSI, go higher, and go to the other extreme. Once they go to the other extreme, now the bears will have no choice other than waiting for another strong bearish divergence to take action. So this part, the bull needs to defend, and then if they might succeed to go to this overbought area, then the bears will only wait for the strong bearish momentum to come and then try to push the price lower. So this is basically the two strategy. This is the bearish side are waiting here. If you look at, if it is a war, this is the non-trading zone for me. This is the bearish side needs to defend, and the bulls guys need to defend this kind of area. And what is happening in the middle, it just and what is happening in terms of RSI in the middle is just a nice fight that we have to sit on the side and just watch.
Yeah, that's when your hands need to turn blue, guys. And we say this a lot for those that follow us on Twitter. We don't tweet as much, because literally the market sometimes just needs to figure itself out. We can't trade a mess, and it's like reasoning with a crazy person. So when it's in the middle, the market's a crazy person. You can't reason with it. It won't rhyme. It won't do anything. So just leave it out alone. You take action when the market is fearful. You take action when the market is greedy, because at that stage you can, with a higher probability, guarantee the next move or predict the next move, whether it's going to play out. It's a tough one. So scratch that guarantee word. Now, Lee, do you want me to move over to a Wyckoff, or should we do a little bit of a announcement first, buddy, before we move on?
Up to you, man.
Okay, well, let's touch on a Wyckoff, and the reason why we want to be looking at Wyckoff is when we look at now the set of candles that Lee is sharing. I just want to bring up my screen. Everybody can see my screen. Let's get to Bitcoin. Okay, so Wyckoff is a tricky one, because it actually takes a lot of studying, and it's a large time frame lateral trading strategy. And the idea with Wyckoff is for us to try and determine whether the trend will be reversing or continuing. So the Wyckoff theory is very powerful in doing that. Elliott wave theory is very powerful of keeping tabs of where we are within a trend as well, and should the trend be running out. And that's why we meet, both myself and Lee, we trade well together, because these two theories plug into each other quite nicely. Now, I don't want you guys to get overwhelmed, scared, or give up when you start looking at a chart that's messy. But just remember that there's all these drawings are just reminders or sticky notes for a TA analysis, just to remember what was thought, what was said, and what was discussed at that stage. So what I want to share with you guys today is, because we were looking at this for a long time, and remember I said that when we zoom out and we go logarithmic, I just want to ignore all those dots for a moment, and we look at where the market plays, and we showed you guys how Once we create an all-time high, we create an all-time low. We looked at the 1618 extension, which is this pink line on my screen, becomes the support of the position of the next push to the upside. And that's been the trend in the case of the trend now since, how many halvings we've been going, since the first halving as such. So at the moment, we are still playing that analysis that what we have is that we've got the price that broke out and we're sitting above the 1618 extension. Now, I read a few comments, and last time I did this, a lot of people said that I kind of lost them. So I just want to make it nice and simple. So if we looked at 2017, with this analysis and the strategy, we're kind of sitting in this, and we're going through this mess at the moment, where things just does not quite make sense. It's painful. Everybody's bullish. It doesn't seem to want to work. And we've just dealt with a run where everything was just awesome. For those guys that's been in the market now for 6 months, 7 months, you've had a good, easy 6 months, 7 months, because you could have literally lick it and stick it, and it just went. And at this stage where we are at this moment, oops, let's just take that away. We're kind of experiencing the same thing where we had that insane few months where it just went. Now for that, there's a price to be paid, and we're busy consolidating that price. So with that being said, if we now take that little bit of context and we move it over into a Wyckoff analogy, Wyckoff basically tells us where we have to now start looking for the upper or the lower range of an accumulation, distribution, reaccumulation, redistribution, and then make a decision on how we're going to trade. But in reality, when you do a thorough study on Wyckoff, the labeling of this, whether it's distribution, accumulation, is where most trip up, because we get those beautifully drawn out schematics. If you go and Google Wyckoff accumulation, that shows you how the pattern should print. And it always looks like something like this, a little line drawing. And we can actually take this to a weekly, and then it will almost look like any of those Wyckoff lines where you can literally just compare them. You can see there. So if you start applying this to one of those Wyckoff pictures, what do we have? A phase A, a bottom, a phase B. Now we're going down distribution. The bull market is over. And that's the risk that runs. When we start looking at these lines and we start looking at these patterns, we lose context. And that's where Wyckoff, when you study it properly, shows you the context of this. Now let's have a look at the context of this. So currently what we have is we had an area where there was a lot of selling pressure in the market. Now, I always ask myself, and Lee, you do as well, why did we lose momentum? And for how long, if we go and measure that, if you think about it, to give this thing scale of time, we hovered in a range for 81 days. So we had to have 81 days worth of people selling onto the market to break this bullish momentum that we had. So it's safe to say, if we want to now reignite this bullish momentum, it's going to take a little bit longer than 81 days to just start getting bullish again. And that is why we have to have a trend establishment. In order for the market to truly get into the next emotional phase, where we move from where we are at now and in an optimistic into a belief phase, where everything inside you is telling to you that we are in a bull market, because we're kind of on the side now. A lot of people are. What we need is we need to have a new trend established. And then once this new trend is established, at that stage, we need a test of this trend. That means that the Wyckoff and the way the Wyckoff work comes into play. Now, the nice thing is what I always say to everybody when I look at Wyckoff and I start applying it. The first thing that I do when we have a little bit of a holding of momentum is I would want to see that second attempt to try and get a higher high, whether that falls short of the 618 retracement, which is a simple flip retracement. There it is, or whether we can get above it. Now, Lee, when we trade a nice impulse, your 618 kind of becomes a floor level, and we start stepping at that. And within the Wyckoff system, basically what that means, and I excuse for all the mess on the screen, guys, but this range over here tells us that at this stage, there's strength in the market because the bears couldn't quite smother this retrace for continuation. And the easiest way to do that is to go back into the past. And let me just show you guys. So there's where we lost momentum. So let's put the fib level on there. We'll put it back there. And as you can see, well, maybe I must just get my time frames right. This is a smaller range. Can only go into daily. But there we go. So there's the big reversal. There's the bottom. We couldn't get above the 618, so we couldn't continue. Now, a lot of people would say, oh, but now we're creating double tops, and there's always another reason, volume's low, and there's always another excuse. But the basis is when we can't get above that, that's normally a sign that the market's going to get negative. And you can go and flip this on smaller time frames. Look at this range over here. And when you start looking at that, you'll find that that's an area where we struggled. And we use a little bit more data, you'll find that there's more areas that we struggled. So with that being said, where we are at the moment, I'm using that basis as a sign that we were able to get above it. We created a higher low, which is significant, and then we made a higher high. So that's a good sign. Now, with this being said, whether it's distribution or accumulation, distribution means we're going to keep on selling, and then dump down and make a lower low. Or accumulation, we're going to have a shakeout event.
Are you pointing down to 10K? Be careful, huh?
Yeah, don't want to go 10K. Remember, this is just mouse moving. So whether we have got a distribution, which means we want to go down, or whether we're going to have a reaccumulation, there's a time where we're going to have to make that decision. And that is exactly in the same way where we had this 618, where we looked at this area here. That time to make that decision is going to be based on this trend establishment that we had. So here we've established the trend. So my thoughts is, and it's simple, I'm waiting to see when, because we don't know when. We can trend down strongly and meet up with this level. We can trend down slowly and meet up with that level. We can go higher even and then come down and meet up with that level. Nobody knows. The best thing is, the only thing that we do know is there is key levels, and we've laid them out for you guys, and we shared those key levels to you. And now, yet again, this is where the trader needs to be patient, and the investor, because only once we get to these areas, we will be able to then to know whether we need to make a decision to take some profit on our investment, or take some profit on our short, or whatever the case might be within the situation we find ourselves. So looking at this and looking at the big picture of what is playing out, if I now take this messy chart away and just go to a clean cut chart for you guys, at the moment, that's where we reached to these areas here. And this is where both our strategies line up with the same targets. First target is, this is the demand zone where we started to lose momentum. So the imbalance left behind there is going to be recaptured. Why? If you think about it, money needs to be recycled. We always say that these whales, these big players, they've got all this bags and bags of money and they can just push. But the reality is they can't just push because they're battling other whales as well. And remember, each and every one of us has got our own agenda. So why is it not safe to say that whales do have their own agenda as well? They're trying to make more money than their competitors. So at some stage, this money that gets injected into the market has to be recycled. So what do? They reach a point where there's little to no interest, and then they start buying. They buy. So they buy the price up. What happens? People that were on the side or maybe took profit or were a little bit sensible, they buy back and then they trap them in. And this is what's called a bull trap. The same can happen, obviously, to the downside.
What is your buy box zone A here? What price range?
Sitting at around 57. So if I want to recycle my money, and the idea is to try and look for, you say you've got a 3-wave impulse. I'm thinking that this might even be part of a bigger 3-wave impulse. We don't know. But the argument is that this area where all this money got pushed into the market needs to be recycled. So they will be the ones selling. Because if we're in all-time high, who was the idiot that started selling at 67? It wasn't me, because I wanted this thing to keep on going higher. So who was it? Somebody that bought over there with an ulterior motive to get you to take more of his Bitcoin that he bought over here, so that he can dollar cost average himself again into this range over here or that range over there. So remember, it's all a strategic game. So the targets that I have at the moment, is basically going to be the 57 for a long and 52 for an even longer investment long. So whether we're going to get there in one swoop or whether it's going to take some time, nobody knows. So Lee, any questions you have on that?
No, everything is nicely done. I've got one question though, and not for me, but maybe for the community out there. What must I do if I didn't sell the top? Or what must I do if I bought the top? Must I sell now? Must I keep?
Okay, that's a tricky one because there's so many strategies out there, you know, and we always say when we look at this, I can only share what I would have done. But when we give advice, and we can't give advice, please remember this is not a financial advice. But when we share our thoughts, let's put it there, and put ourselves hypothetically in your shoes, the reality is that I can only look into your life through a little window. So I won't have all the facts. Firstly, you need to understand what the scale of time and what the burden of the financial investment is going to, mean to yourself. Secondly, what I would do is then I would not necessarily sell extreme fear, because the way the market runs is when you start seeing these fear for people, these are scared people that sell, and that's normally the leverage guys creating them by giving promises to sell with their stop limits. So they put a buy and then they put a stop limit a little bit lower as a promise to sell, and then the market trips over itself, so it starts selling itself down. So I wouldn't necessarily sell in this range. What I would be doing is I would be keeping an eye on this, because what do we have at the moment that might give us a little bit of relief is the fact that we've got a pivot over here, and we're at the moment busy creating a pivot over here. But when we look at where the RSI is in relation to these areas, it is easy to assume that if that's the ratio of price reaches this level over here, you can see roughly the same distance, and the same amount of selling pressure kicks into the market than where we have over there, it would be safe to say that we might be making a lower low and a higher low on price. And Lee, what type of divergence is that?
Hidden bullish divergence.
Continuation of the larger trend. And that would be my scenario. But on my way to that, I don't want to be holding all this risk, because that would be foolish. In the road that goes there, remember, nothing goes up in a straight line. My argument and my best defense that I would then have is to start being part of the resistance. Don't be the support, because you can't support nothing by holding. Being part of the resistance means you're flipping over to the winning side, and that's what true traders do. We are never committed to one side. As a trader, I want to make money. If I'm not making money, I'm out. And at the moment, you can see that this range over here is currently where there's a lot of supply entering the market. So I see this thing do this, and I see us to help the bears not get above this level over here. So for me, my exit point would be around the 62 and a half level. Sell the resistance, although every fiber in your body is going to want to tell you to hold. It might go back up and I might break even. Take a little bit of loss, and you don't necessarily need to sell all of your money, Lee.
Yeah,
we say laddering in on buys.
If this thing plays out and you feel like already today you are overexposed and you have too much money in the market, if this thing goes to 57, come back to the 618 reload zone, which we would expect another resistance area for the sellers, then that is the right moment now at that stage to rebalance your portfolio. If you are overexposed, then take a little bit out in case the market is going to drop even further down, because technically no one knows if it's going to go up or down. So if you're overexposed, then just be patient. The market will always give you a second opportunity to exit the market. And if at that stage you are break even, then limit your risk, limit your exposure, take a little bit of money out. What if it dumps again? Then you will have money to buy the dip.
That's it. So,
and if it goes
always
up, if you have still 50% in market, then you make
money. You're making money. Always treat the market as if you don't know what's going to happen next. I don't know what's going to happen next. I speculate, and Lee speculates because it's a theory. Remember, the name clearly states it. Elliott wave theory. It's not Elliott wave guarantee. And it's not Wyckoff guarantee. It's Wyckoff theory. Theoretically, that's what we
Stop. Elliott wave guarantees you street scenario, up, down, and sideways.
Yes. The market can only do that. It can either go up, or it can go down, or it can go sideways, but it can't do anything other than that. And yes, so guys, I hope that this helped and nursed a few of your nerves and so forth. But the main thing is to try and protect ourselves going forward. So we're always going to have new people entering the market, and this is why some of these things tend to repeat itself. We looked at these emotional market cycle, and it always looks the same afterwards. But during, you feel like, why couldn't I have had the knowledge? But during that stunt, you kind of get blind because fear freezes us. Fear has got a paralyzing effect on our consciousness. And if we act decisively beforehand, that moment you're not consumed with fear. So you get to see the market for what it is. There's going to be somebody joining crypto tomorrow, somebody joining crypto today, and next week, and so forth. That's the thing about an adoption. And they're going to be right where you were that maybe joined 6 months ago, 8 months ago. They're going to have to make the same mistakes and learn the same lessons. Think about this, though. If you were to go play tennis with a professional tennis player, number 1 in the world ranked, would you on your first maiden game go and think you're going to beat the guy? He's going to have tricks up the sleeve running you sideways through the court all day long. Why? Because he's been doing this since forever, and he's really good at it. That is who we have. That's our opponent. For every buyer, there's a seller. The sellers, in this moment at this stage, is the guys that know what to do, how to act. So they're going to be beating and playing you for the fool, until you get to a point where you become street smart. You go to the gym, you get your fitness level up. You come back next time, you come back, and eventually you end up becoming a pro as well. And then you're going to be looking at these new guys saying to yourself, listen, you guys should have come prepared. I'm just going to play with you. And that's what we do, basically. We try and see how these guys are going to mess with everybody, and we trade that with them, sadly. So we want you to be part of the journey. We don't want you to be messed with. But it's going to come with time, and it's going to come with practice. So thanks for letting me rant on for a bit, really. I appreciate that. Right, guys. So we've got an announcement that we want to just share with you guys. And I just want to bring up the tile for you. And there's still not a lot of info on it, but it's basically the Discord early supporter. So the idea behind this is, we're still finding our feet. You can see every week there's something new. This is a new house, new office. I have not furnished it properly yet. We still, there's a lot that needs to be done. These things doesn't happen over time. Cameras, lights, mics. We're still working on that as well. And while you guys are sitting through this and and humoring us when the sound is not right and all stuff like that, we just want to say thanks, guys, because we're trying to get momentum. The artwork will improve, the graphics, and all these things is going to grow as time. So the way that we want to thank you guys is by creating the early supporter role. So if you go and join Discord, Lee, do you have the info, or should I share the info when you go onto the Discord, or where would they would get the info for the link?
No. It will. We'll put the link in the announcement Discord channel,
and in the description.
Yeah. We will tweet it out there as well. So we want you guys to help us tweet, share the links, tweet, tag some friends, and then and after doing that, we're just gonna double check if everything has been done correctly, and then we will reward you with the early supporter role. And believe me, we have some ideas about how you guys gonna benefit from this war in the future. So it is worth doing those just small clicks on your side and sharing with a few people. Yeah. and we will
help us get the word out.
Exactly, and we will try to help a lot of people in that way.
Cool. Lee, I see we're 35 minutes in. Let's just quickly make sure I've gone through. Let's talk alts. We looked at a few coins. Your RUNE, please bring me your RUNE. I want to have a look at that.
RUNE was yesterday's call. Okay. RUNE,
yeah,
RUNE,
let's start there.
To the cent, not dollar, cent.
Right, just zoom in there for us. Do you have a little bit of a game plan there?
Well, the game plan now is easy. I mean, I'm just targeting the area where I see, reaction zone. So if I'm a trader right now, if I'm in if I'm trading this right now live with you guys, I got my entry, the perfect entry. We had already a nice bounce back. Obviously, I'm hoping that this will hold, and when I go and make a higher high. But especially if I'm trading, not as investment, if I'm trading this, I will put already, my stop loss was, below this box. Still have this order open there, but I will already put my stop loss at this kind of entry already. So if they come back and stop me out, then I'm fine. I'm stopped out already. So it's a different strategy how you're gonna manage this trade as of now. Either protect yourself if you want really to protect yourself and do not lose your money, because remember, when you enter a market, you're gonna be losing money in the first second you enter the market. So it's really difficult to be positive. Don't give your money away. Don't give your money back to the market. There's always another trade. If this one doesn't work, I still have orders below this entry. But yeah, I mean, really happy with that one. And if you dive in a smaller time frame now, maybe we can tune in a little bit of better entries, especially if Bitcoin is going to come down back again. For example, here on 1 hour, what did we do? Price has react 1, 2, 3, and we are already forming this hidden bearish divergence. So it doesn't mean that we had a good entry here, but it doesn't mean that this will be the perfect one. And it does mean that the price will not come back for lower lows. And especially when I see that hidden bearish divergence, the sellers will come and try to push the price lower again. But at that stage, again, if you want the perfect entry, I need to dive into 15-minute chart, sometimes even 5-minute chart, to look for this perfect entry. So I was expecting zone on a bigger time frame at this kind of zone to ladder in. Or another strategy, you can start laddering in now. This is a good zone, good reaction zone for an entry. And if you want to buy it a little bit lower, then you can still scale in. I mean, ladder in a little bit here, a little bit at $8 even. A week ago, when I was putting this number out there, no one would have believed it. So they would prefer to buy here at $14, $13. So it's already now a huge saving. So for now, if you want to invest in RUNE, I will start ladder in here, and expecting a 3-wave up. And when you have some separation, you can always protect your entry. On your side, Rodo, anything to add on RUNE?
Yeah, so basically the same. Look, my strategy, like we said the last time, guys, there's many ways to skin a cat. So mine bounced nicely.
Yeah, exactly the same. What kind of trader you are? If you have time to trade the whole day, then you look at 15 minutes, you can manage your entry, you can manage your exit, you can manage your stop loss. But if you don't have time, then you should have already taken all of this in consideration and put whatever money you can afford with a stop loss. Obviously, the money that you can afford to lose already at the beginning.
That's it. Yes. So mine is there, but what I just want to point out to you guys, and Lee said it now, remember, we are not in upwards momentum territory. So I'm buying, and we all should be in gains, guys. So if you bought the bottom, you have to start bringing your stop limit up. You have to look at that. We're securing some gains when we have a little bit of a bounce into these ranges. For me, the big thing is what I would want to do. Say if I've had $1,000, and we did say this yesterday, if I had $1,000 to spend on this, I would be in with about $300 max at this level here, because it will break trend at some stage as well, come back down, probably create another structure, and then we start buying in a little bit more. Remember, this is the time zone that we were thinking about. the highest probability bounce zone where we go and do that. What in the same way that would happen with VET when we looked at VET. And if we've got time, I think we need to try and get in on VET as well. So I'm just going to leave it at that. Let's move on.
Let's speed it up a little bit. I don't know if you touched on Sol yesterday.
Yes, we did.
We did. So Sol, I said I was looking for a lower box. I mean, still not here the entry yet. Sol is holding quite strongly within that dump. So nothing to add on that. SuperFarm, I think it went also to.
I'm just gonna. I just want to flip back to Sol quick. I don't have anything to say on Super. Remember what we said yesterday, guys, about the volume. And you can see by the time closed, there was literally no volume in this project. So we said this looks like a fake out. And we had our X amount of hours and it ended up turning into a fake out in any case. So that just keep that in mind, guys. Negative momentum, we want to see the positive momentum before we buy. Okay, thanks, buddy. Back to you.
SuperFarm. Same. I mean, top of the box doesn't mean that it's not gonna come. It's not gonna come later, a little bit later within this box. But yeah, it's still early for us to take position on a short-term trade. Basically, here, we're still very far from that trend line here. So we are very far from here. So even if you take a trade, they're probably gonna come back, test this trend line, and retrace it a bit. These are really risky entries, because basically we are just targeting an area, and by the time it comes here, then you want to see some kind of divergence, and this kind of momentum change within this box. So trading like this, try to guess where the price is gonna end. It is really risky as a strategy. Usually, what I like to do is, if I'm expecting a drop like this, I will always wait that they finish the job. Now after that, you have kind of reaction, and from the reaction candle, now I can fine tune my entry and what I want to see. If I want to see a lower low compared to that week, then I will prepare my entry within this box. And otherwise, we can look also at the smaller time frame, the small imbalance area within that next candle or the next two candles. So when there's a flash sell like this, I always like to wait a little bit first, and then see what the market is bringing me. Give me a little bit more candles, so for me to study that on a smaller time frame and decide at that moment.
Yes, I don't really have much to share. I mean, you said it beautifully there, Lee. So let's move on.
Then what next? I've got Luna next.
Let's go to Luna, then we'll quickly do VET, because I want to just give you guys an update on VET.
Yeah, do VET. Do your update on VET.
Okay, cool. So when we look at VET, remember when we said we had this establishment of trend, we've got the higher high, and what we were looking at is either this target or that target for the buy. Now, what we had this insane wick again, so it kind of tells us that this is going to be the preferred range for the buy. Now, we spoke about this, and we said to you guys about the divergence and everything that needs to play. So we might end up with Bitcoin being negative and trending down a little bit longer. This is where we might going to have to have a look at VeChain in relation to Bitcoin to see if there's a possibility that this thing will outperform Bitcoin. Otherwise, let's not be getting into it too maturely now. So what we do have is we've got a little bit of momentum that has been turned into VeChain's favor, and but it still does not necessarily say that we're ready to continue onwards. So if we move back to VeChain on the dollar pairing, the way that I'm looking at this is that a consolidation in this range would be very good at the moment. I'll use this area over here and where the stop of the daily candle close ends today, because that's kind of the agreement. Remember, candle closes is where people shake hands. It's an agreement. We're not happy with that. And wherever that is, that would start giving us the fine-tune range and a probable stop limit range for where to get into this VeChain now. When we look at this areas over here, and I just want to point this out to you guys, these pivots are way down there and the RSI is already running below it. So we're already getting the good bullish divergence that we want. So time is the only thing that needs to play out in order for us to capitalize. And I just want to bring you guys' attention back to this and the way we look at this. And if I put a little time analysis on here and we still look at that 70% level, from top to bottom, there's the 70%. And look at where we're at now. So we've broken out, we've got the 70, and realistically what you would want to do is you would use that as the top. So we're in that 70% level where the breakup normally happens. So we're in the right zone, we're in a zone where we need to take action. And it's getting to a point where I'm looking at for the right evidence to start grabbing my buy. So if you did prematurely buy, guys, we have to wait. You'll probably have to wait to about 15.8. Once that level reaches that area there, start selling, reduce your position so you can buy back a little bit lower, because with these projects, obviously from there to there, it's a 15% drawdown. We don't want to have that amount of risk laid to ourselves. And then lastly, just on this, what we do have is we've got the establishment of a trend. Remember, we overshot that a little bit, but that's panic and fear and stop limits. That's not people's idea of where the price should be. And we can use this little bit of a trend line. And a trend line is nothing other than a moving average, guys. We can use this to kind of gauge by the 19th November or so, we would want to see a buy in a buy zone and roughly see price reach that area over there, maybe to see if we can get a higher area. Because at the stage, what we do have is we've got a little bit of a bearish momentum. And if we can get that buy, boom, and we can get above that trend, we'll make a higher high. We'll engulf this bearish structure. And that would make me very happy, because then I know our VeChain is going to do well. So this would be the key area that we need to have a look at. That's it from my side regarding coins. I'm going to flip over to you there, Lee, and maybe you can take it away and finish it up for us.
I like your drawing. Thank you. That's why we call you the chart artist, right?
I'll NFT that for you guys.
Nothing much on my side. Luna, I was just looking at some support and resistance lines. And as you can see, I mean, it works pretty well, those lines, Rudo. What do you think? 43.06 was the line on the weekly chart. So it went there, went a little bit below, and then we have a nice reaction on this. So on the weekly chart, if we don't close below this $43 line, Luna is still bullish. The bearish view is we could do an A and a B and then C, and even coming back to this 34. That will be the bearish view. But if you hold this 43, but we don't close anything weekly chart below this 43, next target for me is still really bullish at 68. And we went last week to this 54. 54 was the highest of that week. And I was also calling to take profit. The take profit here was again 54.76 and 54.97. So perfect. Those lines does work very well on Luna. So next one, if those two works, then why? I mean, there's no reason why this 34 is not gonna work, or even the 68. So this is the price level I'm tracking on Luna.
Yes.
Okay, I think
so
we have 40 minutes.
Some good claims.
40 minutes in. We'll continue tomorrow. What do you think?
Yes, I think so, guys. Let's just sign it off with a little bit more admin. So, guys, looking at the $100 to 1 million strategy, that is still going to come, guys. We are working on it. Remember, like we said, we are ironing out the kinks. We're still new at this. So once we have got a good production, we've got everything sorted, and then we're going to start having more time and attention to help you guys through this. Join the Discord. Please go do the few things that we ask. Get that early supporter role. It's going to benefit you guys going forward. And it's there to thank you. That's what we're trying to do. We're not asking for money or anything. We literally just want to thank you guys by rewarding you. And that's the reason and the area where please go and have a look at the Twitter areas as well, all our socials. So they are all loaded up under our profiles. Please go and have a look at these links. Please don't fall victim to scam artists, people duplicating our stuff. And then using that to give you guys outlandish promises of buying early coins and so forth. Guys, we don't do any of those things. We're straight up, what you see is what you get, people. And through hard work and commitment, you're going to be able to make your own millions. And that's what we want to teach you and how we want to teach you guys. Other than that, guys, when in doubt, slap a fib on it. Thank you very much, Lee, for sharing everything you've done. Maybe you can just sign it off for us, and I think then we can roll in credits.
Well, nothing more for me to add. Thank you very much for being with us again every single day. And yeah, if you like the content, like give us a like, share the content like usual.
Yeah, and it's growing. We the live views are growing. So thanks, guys. Really, really appreciate it. I mean, all the proof and the reward you guys are giving us back through that is amazing. So have a lovely day.
Bye-bye. Well done, Rudo. Nice
Thanks, buddy.
Nice Wyckoff study.